In the last few days, the market gave investors almost everything that they wanted. We are sitting on new all-time highs. Oil came down hard. The big tech earnings are coming in very strong. Trump has signaled positive developments around the reopening of Strait of Hormuz. So this almost looks like the all clear when the markets can just keep going higher and higher from here. But that's also exactly the problem, because there's one chart that is still keeping me very cautious about all this. And it's about a pattern that has held for decades, which is suggesting that we could be seeing a drawdown in the markets starting as early as the second half of August. In fact, this is the same stretch of the calendar where some of the ugliest sell-offs of the last decade got started. So in this video, I will show you the chart. I will show you what happened in the years that look the most like this one in 2026. And we will also run through the S&P 500, the NASDAQ, the top AI stocks, as well as Bitcoin. So let's get into this. What is the data that I'm really talking about here is actually two things. One of them is simply market seasonality, which essentially just shows how does the market tend to move in specific times of the election year cycle. As you can see, in a normal year, the S&P 500 kind of just grinds up, even though in October it does tend to have somewhat of a little bit of weakness here. But specifically in midterm election years, as you get closer to the actual date of the midterm election, the market tends to sell off. And there's a very specific data and pattern around this also following the midterm election, which talks about buying the S&P 500, specifically on midterm election day. And the following 7 months after that basically has one of the strongest seasonality in financial market from a returns perspective. This is a seasonality that never, not once, had a negative forward return of a 7-month period going through World War II, Vietnam War, 1970 lost decade, the dot-com bubble, GFC. Basically all crazy periods in financial history have resulted in strong financial market performance in the coming 7 months after the midterm election. But let's take a look at what actually has happened to, let's say, QQQ or the stock market in the last few times when we have come into this time period. So again, I'm looking at August, September, October, specifically as weakness in the markets. And let's just start right here in 2022 as a midterm year and see how it played out in here. So there is, of course, a specific characteristic of 2022, which is that by the time we got to, this is June, so it's a June low, August 15 high, into October 17 drawdown, going sideways all the way until the end of the year. And then essentially January, February, we made a higher high and the market broke out all the way until June following year. So this will be technically that 7-month time frame with very strong bullish seasonality. But again, what happened here? June to August 15th. And after that, the QQQ has dropped 24% in a span of 60 days. So this is the midterm year seasonality and how this played out in 2022. Let's go back a little bit more in history. Again, this one was a quite steep one, keeping in mind that this market structure was already very bearish and was already downtrending. Let's take a look at another one, which is going back to 2018 midterm year. Let's just zoom in here. What happened in 2018 is essentially a July drawdown as well. So kind of similar to what we have seen this year. Then very bullish beginning of August, end of August making all-time highs, then almost making new highs again in October. But then this is beginning of October. So 1st of October, we have a 23% correction again, going all the way until the end of the year. In December, in a span of 88 days, the market has dropped 24%. Now, what would it look like if we followed the principle of what I mentioned of buying around midterm election day? That means we would have bought the dip somewhere around here in November 20th, and that would have led by August, May, Yeah, approximately by May the following year, so about a 7-month time frame, approximately 22% upside by buying the QQQ. So what was the previous instance before this of a midterm yield correction? For that, we have to go back all the way to 2014 here. Let's zoom in here again. What happened in 2014? So we go into July, and we have a little bit of a drawdown all the way until the beginning of August. Again, kind of what happened in the last few weeks. We had a little bit of a drawdown. Then going into end of August, a bullish run up, and then going sideways, essentially all the way until mid-September. Then in mid-September, the drawdown begins, which lasts until mid-October. So let's take a look at this one. It basically started about 19th of September. It was about a 10-11% correction, which lasted about 28 days. And again, let's take a look at buying around midterm election day. So let's just say that would be somewhere around November 12th, approximately. Looking at about May the following year, the market was trading 10% higher on the QQQ. So this is just what happened in the last few instances when this seasonality has played out. So again, going back to S&P 500, and if you've seen some of my previous videos, you know that my original idea for markets was that we reached this 780 in August, which is ultimately going to be marking a local top here before the seasonality pattern actually kicks in. Now, I wouldn't expect that every single candle movement is going to directly follow this line here. It's obviously more of like a directional bias of where I think markets will be heading. It's very possible, like we have seen, that the market will hold all the way through September before we make the directional move to the downside. And what I marked here is essentially an approximate 18% drop. Historically, we have seen as deep as 24%, which will bring the S&P down all the way to 600. Is that realistic? Considering companies are earning more, considering the world is overall fine, it's possible that we have such a deep drawdown. But the one I am personally eyeing the most is actually this gap right here that we still have open since we had this large move to the upside from the April lows. This is also a support level that I believe is going to be quite strong. So for any downside, if I'm shorting and I'm hedging my portfolio, I am going to be looking at and eyeing at this 650 level on the S&P 500 for a strong re-entry zone, for a potential strong bottom and a bounce zone of indexes. From here, again, going into that extremely powerful 7-month time period in the markets for returns. And it's very possible that from here, we go all the way back again to making new all-time highs on the S&P 500. But from here, for me, what is the upside potential? Again, we could see 780 in the coming week. This is a very strong bullish momentum. If I look at my own personal systems, and if we have the strong daily close, we are going to go risk on the S&P 500 right now. With my system, both of my momentum indicators are providing me with buy signals. So again, currently it is risk on, but the moment I see the momentum fading and I see sell signals on my system, that is the time for me to start entering into protective positions in the market. And these are going to be my target zones. As you can see, based on history, we are looking at 10% to 20% drop in the S&P 500 in a very short span of time. This happens within 60, within 90 days even as a drawdown. There's something else that I wanted to show just to complement some of my thesis. Now, whether you believe in astrology or not, there is a quite crowded window of movements happening between September 22 and October 31. Historically, these windows have always brought increased volatility in the market. So again, second part of September, specifically until end of October, as a highly volatile time. And if we look at the 1998 playbook, essentially this is exactly how the markets are playing out right now. It has followed some of the biggest market corrections and moves. Where we are right now is that they made all-time highs, we had a pullback, And then the market went back up to make new all-time highs, which has marked the top before it has gone into, actually in this case, it has created an even lower low than where the April lows would have been. So where that would put the S&P 500 is all the way down to the 600 level. If it's following fully that, it will be a way steeper size correction. And again, we have seen 2 out of the 3 occasions of the last time this has happened, the S&P 500 went down 24% in a span of a couple of months. So again, that's exactly where it would put us, around the 600 range. So in terms of like buy zones, if this really plays out and I'm sitting in large cash positions, my most optimal entry point is, of course, going to be right here. And should we get the blessings of making some entries somewhere around here, that's even better for me from that perspective. But yeah, this is kind of still what I'm expecting in the markets. I'm very happy to see all-time highs. I still think we can spend another week or 2 hovering around here. We can go higher all the way to 780 on the S&P 500. Absolutely possible. But I still do think that as we are reaching, especially around the second half of August, end of August, we are entering a time in the stock market where there's been a lot of returns made, and there's a quite high probability based on seasonality, market patterns, to enter into a larger drawdown here going into Q4 before we head into an extremely strong and extremely bullish seasonality in the stock market. So that's like my overall big picture view of how markets will play out, and also how I am positioning personally my portfolio for the rest of this year. So we already looked into QQQ. One of the things I'm looking at as well is gold. Gold is sitting at a fairly strong support level right here, about $4,000 an ounce. I do think gold in the long term is a very interesting investment. Is this the bottom? And that's a very good question. Historically, commodities, especially gold, tend to bottom in the August timeframe, but I do not have a buy signal yet, specifically on gold, where if it breaks out of this to the upside and we go above these medium-term moving averages, that will make me think, okay, gold is again in an uptrend. I'm ready to scale in. I get my buy signals from the system. Let's do it. But we don't have that. We have a bearish trend that's currently established on gold, and I'm still relatively patient with it. Historical corrections on gold were as steep as 40%, which means there's still the possibility of an ultimate downside target of somewhere in the $3,400, $3,500 an ounce range on gold, all the way down here. Right now, gold is down about 30% from all-time highs. So historically, it's a decent value zone to start accumulating it. I do think it's not a bad price to looking to get gold and start allocating here. And I'm personally looking to purchase as well. But I'm also mindful of the fact that, again, if all the markets correct, is there a potential where gold goes all the way back down for another 10% correction? I also see it very easily happening, and that ultimately marking an unbelievable generational buy for gold. For my portfolio, I am 100% buying. If I'm seeing this as an extremely high conviction bet on gold for a long-term investment, this might not be the sexiest for most people who are chasing extremely high returns very, very quickly. But look, you're buying gold 40% off from all-time highs. For gold, even if it just goes back to previous all-time highs, that's already 64% from those levels. Gold going back to all-time highs from current levels is also a 30% return just from the current position. So that does make gold, because of the current prices are suppressed, more attractive to me as a long-term investment, just because it's a decent entry and it's, I think, a good value. Then let's look at some of the AI names and trades. NVDA, my system, depending on the daily close, might be popping green, especially if we clear the 215 zone. If we do clear the 215 zone on NVIDIA, I would expect a quite strong continuation of momentum in some of these AI names in the short term. How long can that last? Again, maybe 30 days, maybe a little bit, maybe around there, depending on how much of an impulse move it is on NVIDIA. If this move was to play out where the price target would be, I would say previous all-time highs at first, clearly. Best case scenario, 250, 260 range on NVIDIA. Is this something I'm looking to trade? To be honest with you, I think it's a good signal to watch how NVIDIA moves. Is 215 cleared and holding? There will be, I think, a pretty strong risk on signal across the entire AI trade that there is continued momentum in the short term. In the long term, where would I like to buy NVIDIA? I don't know if I'm going to get this entry point around 165 again or in the 150 range, but I do think in the long run, NVIDIA around those levels is a very interesting long-term investment entry point. Right now, I'm not specifically holding any NVIDIA position in my portfolio. There's another part of the AI trade, which is actually two companies that NVIDIA is significantly investing into right now. And one of them is CRWV, and this is a position that I've initiated with a $75 entry point. They have earnings coming up in 7 days from now. And I have done an enormous amount of research on neoclouds. I do think neoclouds are going to be one of the best performing stocks over the next 12 months. In terms of that seasonality window that we're looking at, this is going to be a top narrative, top performing stocks, making a lot of money, making a lot of deals, in my humble opinion. And with that being said, currently my entry on CRWV is up approximately 25% from the entry. I am eyeing the 130 to 120 range where I would be open to just taking profits on this current position. But this is something that I am very interested in scaling in further and buying more. Should there be a dip coming in again, October, November, September, whenever that comes, this is something I'm thinking 12 months ahead is fundamentally a very strong bet. The same goes to NBIS in terms of technicals. This is a lot more beautiful pattern or structure that we can see as it has made an impulsive all-time high move. This stock is already up. How much is it up this year? 160% year to date. So unbelievable performance. But why? The performance is there because there is so much revenue growth for the stock. I think this is going to be a $400-500 stock by the middle of 2027. Is it going to be a smooth ride? Definitely not. This is a stock that often comes down and corrects 40-50% before it is making these large moves. As you can see, it did it twice already in 2026 alone. In 2021, the stock have gone through an 84% correction. So again, this is a stock that has very high upside potential, but also comes with very high volatility. My system is potentially returning risk on NBIS as well. I already have my price target, as I mentioned to you. In the long term, I think this is a very solid stock to be scaling in with a time horizon of 12 months. I am not fully in the position yet. I have a 165 entry as a beginner position that I'm looking to scale up. But again, my main timing for deployment is I'm waiting for that November, October. I'm waiting for that drawdown to come so I can get the best possible entries in the names that I'm looking at. And if it keeps going higher, it's also good because I already have a pretty good position that I have initiated in some of these names. And overall, I'm very happy to trade these as well for the short term. Going over to Palantir. Palantir is a very interesting stock because it kind of fell out of flavor. You know, it was like the darling of the AI trade, was nonstop going up essentially for years. And then it had a 50% correction to the downside. The CEO is out here saying some crazy things. Whether is that the reason or not, at this point, you can look at it two ways. One of them, there's a clear downtrend on Palantir that this God candle is trying to invalidate and trying to bring it back to a bullish trend. Should this hold and Palantir make a similar move like that, where we cleared these levels and managed to maintain above that, that would likely ignite new all-time highs. In terms of revenue, Palantir is a very profitable money-making business that keeps growing its earnings, which is a good sign fundamentally. But in terms of technicals and momentum, another thing to keep in mind is obviously this large gap that was just caused currently. So how is this going to play out? I am personally not trading Palantir. I personally would, if I was holding it from below, take profit on it right here and wait for the moment where this level gets cleared up and a new bullish trend properly gets established here on Palantir. Then let's look into the world of energy. One of the stocks that I personally really like is nuclear stocks, and I think it's also going to be a very strong theme over a 12-month time frame. Looking at LEU, down 70%, already going through this major correction. Fundamentals wise, everything has improved so much for the nuclear segment. So many new deals signed, so much more governmental incentives and pushes happening in the nuclear segment. The stock pretty beaten down. So in terms of risk and reward, large upside potential is what I'm seeing. Is it going to be a smooth ride? Absolutely not. But I'm seeing some positive signs as this bearish trend right now is invalidating. I also noticed some strength in this name as the rest of the market was going down. Names in the energy segment are mostly consolidating, going sideways. And I do think there is going to be a moment where this breaks out to the upside. And again, that is going to be a change in trend, at which point it makes sense to scale up higher the allocations. Until that doesn't happen, I'm just continuously scaling into these positions. If I see dips October, November, I'm a huge buyer into these names, and I'm ready to ride them all the way until mid-2027. And lastly, BTC, my darling. BTC is obviously in its bearish year, which means don't expect anything from BTC in this year, but going down, scary headlines, businesses going down. And that's exactly what we've been seeing in the last couple of weeks. Overall, currently, the BTC from all-time high to current price correction is 49%. The average correction would drop somewhere around 70-80% in bear markets. If this cycle is really different because of the institutional capital and everything else that is coming in here, then we could be seeing a bit more shallow bear market. But even that will put BTC somewhere in the $44,000 range, which I would think is a good and interesting entry zone, specifically for a BTC related investment for a long run. I personally scaled out a significant part of my BTC investment in August right here around the 98K zone and also around this $18,000 highs. I don't think that the bottom is in yet, especially considering the larger potential move on the stock market. I do think BTC will likely follow that and find the bottom somewhere in the $50,000 to $40,000 range, in the 60 to 70% correction mark, at which point the bottom is most likely going to be in. And I think that's just going to happen somewhere around mid-October. So hedging into that time frame is very interesting to me. Looking for long-term entries on BTC 12 months out is also very interesting to me as an investment idea. So that's the summary of kind of where I'm at currently with my portfolio and findings. One more thing I want to highlight is that I do have a free newsletter where I'm sharing every single week what I'm doing with my own investment portfolio real time. It's very short, so make sure you subscribe at zackbakos.com. See you there.